Hello traders and welcome to a new day trading strategy video of mine. So as you can see here today we're going to be talking about volume trading and volume and practicing how to trade volume. To start off with, what is volume for those who don't know? So volume represents the number of transactions that occur in the time period that you select. So if you trade with the 5 minute, what you're going to see is the price information with that 5 minute, which is going to be the candlestick, of course, for price. But then right below that, if you have volume, you're going to see how many here would be coins. I was about to say shares, but you would see how many coins are being transacted in that 5 minute window. So it looks like this, as you can see. If we have the 5 minute here, we have each of these 5 minutes shows us how many transactions occurred within those 5 minutes. And we can use this information to make pretty good trades off of. So to start off with how good volume has many pros and really not too many cons as a strategy. Uh, the really good things about volume is that it's a leading indicator. It's not a lagging indicator. So when you use MFI RSI, what it's doing is it's using calculations of past historical information to show you how likely it is that price is overbought or oversold, or if divergence is occurring. But that's using info from the past, whereas volume is going to be using info from the past and the present. So it tells you what has happened at every single price point and at the current price point as well. And that can be very helpful when deciding whether to buy into an uptrend or deciding when to sell. And yeah, let's get started. So first of all, I want to put up a rule of thumb. This might not make total sense right away, and I completely understand that, but this will make sense when we start to get into chart examples. But just read this for a bit and commit it to memory. Okay, so even more important, let's look at this too. So there are three main types of volume spikes that I have included here. So if you want, again, you can pause the video and read this for a little bit. But to start off with, let's talk about each one of these three before we go into the example. So the most common volume spike that you've probably watched videos of or heard of or seen it on a chart is an overbought or an oversold point. What that means is in an uptrend, you're going to see an overbought point. What that means is when price is going up, many retail traders are going to be watching that price, and they actually tend to make the same move at the same time. They tend to all buy at that same price point because it's the herd mentality that is going to be affecting their emotions pretty equally across the board. So what we want to do is actually trade the opposite of what they're doing. And it's pretty obvious typically to identify when that's happening. And you're typically going to see a very long price tail. And what that price tail means, and I'm going to show right here, what a price tail like that means typically shows rejection at those levels, and that many traders got trapped at bad positions or exited positions because they panicked or got greedy. So yeah, that's overbought and oversold. This is typically pretty clear, and this one's typically pretty clear as well. This one's a little bit more complex, but identifying these types of volume spikes typically isn't that hard. So number two is strong continuation volume, and I said this one's a bit more complex and harder to identify, but it still is very important. So what is this? So this is also known as basing volume because it's the volume at the base of a trend, and this typically occurs after a reversal in the direction of the new trend. So when you see a reversal, so if you see price going down, and then you see a volume spike that indicates oversold, and you think that the price will now begin to go upward. What you want to see and what you need to see is very strong momentum and very strong volume in the direction upward, because that shows you that demand for the asset is high and that the downtrend is likely over, and that the uptrend is likely begun because of how high demand is. So this, I said, can be a little bit more complex in identifying, but typically if you see a reversal, whether it's bullish or bearish, you want to see very strong volume in the direction of that reversal. And if you don't, then it might just be a retracement. Okay, third thing here, the volume spike that indicates that a breakout is occurring. This one's typically pretty straightforward. What you're going to see is a consolidation range, typically. And when price breaks above or below that consolidation range, you need to see very high volume. You need to see a volume spike. Because what that shows you if price is breaking out above a consolidation range is that demand is very high at those price levels above resistance, which also tells us that price is likely to continue moving upward in that direction. All right, enough of me talking. Let's get started. All right, so to begin with, I have two questions. When you're gonna want to pause this video in about 5-10 seconds to just analyze this. But what type of volume is this? And if I told you that you had to either buy or sell this, would you buy or would you sell? And what type of the three types of volume is this as well? Right here. All right, so I'm gonna give the answer in 3, 2. Okay, so this is oversold. And the reason I say this is oversold volume is a few reasons. A, volume spike. Which means that we're going to be looking at one of these three because volume is clearly spiking way above the moving average. Two, that long price tail is telling me it's probably oversold, as you can see here. And that shows us, what does this mean? What this tells us is people who had bought here, and at previous prices too, they panicked and they all sold very quickly, and they all really sold all of the coins that they had owned at these levels. So I would not expect the downtrend to continue because everyone seems to have already sold at this support level right here. This is support because we have the first touch of support here, now the second touch. So this is very bullish, and if you had said buy, you are correct. Market went right up after all these traders had panicked and sold. And one really cool thing and why the market went up after an oversold point was, let's say that a lot of people had bought here and then they had sold incorrectly here. What's going to happen when the market begins to move back upward is that they're going to panic and they're going to want to cover their losses. So if they lost like 4 or 5%, they're going to want to buy and then try to make that back because people don't like to take losses. They really will do anything in their power to not. So a lot of them probably bought this as a trend had already formed, and then you can see that that's what caused the price to begin to move upward. But really cool and kind of sad thing too is you can see here that this is overbought volume right here. You see this long green candlestick that occurred right here. It basically occurred at the market top, and what that means is that many traders had probably panicked and sold here, and then bought here, as you can see. But that's just the way the markets work. Yeah. All right. So again, and this is going to really touch on the rule of thumb that I put here. So try to remember that. So again, my question is this: what type of volume is this, and would you buy or sell? And if you want a little bit of extra help, and the reason I put that rule of thumb in there is ask yourself this simple question. Does it make sense that anyone would want to buy at this price level? Does it make sense that anyone would want to sell at this price level? And I think the answer is pretty clear after a volume spike that breaks above resistance. I would say that many people have a lot of reasons to buy. This looks very bullish, very strong momentum, and very strong volume as well. And we were able to clear all the orders that were at resistance. So I would really see a lot of reasons why people would probably panic and buy, which would cause an uptrend. And I don't really see too many reasons why people would want to sell. Even retail traders who just really want to lock in a profit, I don't even think they would do this because the market's moving upward so quickly. They would very likely want to hold their positions. And by that train of thought, you probably reason that this is what's going to happen. And that is what happens, as you can see here. We have a volume spike. This is very clear breakout volume right here. Strong momentum, strong volume above resistance, and price just continues to move upward, as you can see here. And again, this might be the reason because some of these other traders who had bought and then probably sold at this oversold point right here, they might have panicked and bought back in, causing the price to move higher until it was overbought. All right, cool. So again, I think this is probably the easiest example that I've included in here. So I think you guys should be able to get this one. Let me show the three types of volume again. And this guy. So I'm going to ask you guys, what type of volume is this, and would you buy or sell? And in 3, 2, 1. Okay, this is very clear breakout volume. This is also as a breakdown because it's breaking below price, but I like to call them breakouts, whether they go up or down above consolidation. We have a support level here, you can see, and support's broken. Price pierces through support on very high volume. I mean, this really couldn't be any more bearish. Do I see any reason, again, I'm going to ask myself, do I see any reason that people would buy at this price level? I don't. I really see no reason why any trader, retail or institutional, is going to want to buy at this. No, not really. I can't think of really any reason. Maybe because they incorrectly think this is oversold, but I could see a lot of reasons why people would want to sell this. And one main reason would be that many people had probably panicked and sold here as price had gone down so quickly and on such high volume that they reasoned correctly that price was probably going to continue going downward. And that's probably what occurred here. So again, there's a lot more reasons why people will be selling this than buying this at this current price point. Okay, so now I have the toughest example by far in this one. So here's my question to you again. What type of the three types of volume is this? And do you want to buy or sell? And again, this one is a little bit tougher, but try to think of this. We have a downtrend, retracement, continuation of the downtrend, volume spike here that indicates a probable reversal and not a retracement. And then we have this. So let me give you guys 3 seconds to just reason through what you think this is, and would you want to buy or would you want to sell? Yes, this is actually continuation volume. And again, what I had said before is continuation of volume occurs after a reversal in the direction of the new trend. And this is not breakout volume, not yet, because price has not broken above this resistance. And this is clearly not overbought volume. It doesn't really look overbought to me because price was just in a powerful downtrend. So I wouldn't expect that this would be overbought. Yeah, and again, you'd ask yourself, is there more reason that people would probably want to sell this or buy this? And as you can see, price consolidated a bit and then went upward. And there's much more reason why people would want to buy this than sell this, for sure. And if you did say breakout volume, you're kind of right, but you're right here because you can see that this does form resistance. And then when price breaks that resistance, you get another volume spike that propels price higher. But I still would call this continuation volume. Now, one little really helpful cheat that you can use when it's saying, hey, is this a retracement or is this a reversal? Because I get that question all the time. And one thing you can do is actually look at volume. And I'm going to add this in here. Notice here how this bottom of the retracement, if you had noticed this and you were like, should I buy, should I not buy? There really doesn't seem to be a significant volume spike, just a minor volume spike. And what I mean by that is you can see that the orange is the moving average. This volume spike looks to be just about twice the moving average, and a reversal probably is going to have much higher volume than that. So I wouldn't really expect this, even with 2020 hindsight. I know that's what you're probably thinking. Hey, you can see what already happened. I can, but still we can look at volume to distinguish why we wouldn't want to buy here, because we don't really see significant volume at this price point. Do we see significant volume here? Yes. We see about, I would say, quintuple the moving average from here of a volume spike here and a price tail. So I would say that this is a really good spot to buy, and that this is really not a good spot to buy because we don't really see anything too special. So going off that, let's go into the second phase of trading volume. And this one is a little bit more subjective, but it's still a really good way to get a bias in the market. So this is called trending volume. And if you want to read these first 3 points, you can. I'm going to let you guys do that for a few seconds before I move onward. You should probably pause the video. Okay. And that first point's the most important. Now let's see, how is volume trending right here? And what I mean by that is don't look at volume spikes, don't look at specific volume candlesticks. Instead, look at the trend of the overall volume and then compare that to what price is doing. So let's talk about it here. Starting from here to here and then here to here, what's going on? So this is what I see. I see that as price begins to move upward, we have a volume that is increasing. You can pretty clearly see that volume is increasing here with that moving average. And then we have a volume spike, traditional. Nothing too crazy about that. But notice that the lack of volume as price moves downward. Really not many transactions are occurring except here, which indicates oversold, which is actually even a more bullish sign. Why is volume increasing during the uptrend and why is volume decreasing during the downtrend? And what does this mean? This is probably what you're curious about. How can I use this? Volume's increasing during this uptrend because demand for buying Bitcoin was very high at these price levels. And then as price declined, not many people panicked and sold. So demand to sell, also known as just supply. Supply is really not that high right here. You can see that not many people were throwing away their Bitcoin, and FUD was really not coming in, fear, uncertainty, doubt, was really not kicking in here, as you can see, until many traders probably panicked here with that price still, and here as well. And when they did panic, this is what happened. You know, the uptrend continued. And you would have known that this uptrend continued just by looking at the volume. That volume was increasing during the uptrend, decreasing during the downtrend, and there's a volume spike here. And then moving forward, price does retrace very quickly from the 20K level, but you may have been able to notice this by zooming in on some of the volume patterns. When you look at when price retraces, or when you look at kind of the shrinking volume that occurs until we get to that market top. Okay, so that's going to be it for looking at the PowerPoint that I got together. So I just want to spend about 1 or 2 minutes just looking at Bitcoin and then analyzing some volume. So I'm just going to go rapid fire what I see here. So I see this is oversold, as you can see. And the reason I'm doing this again is just to apply what we just learned in the PowerPoint into an actual live price format. So this seems to be oversold volume right here, and you probably would have been able to trade this pretty clearly if you were at your computer and monitor around 10 p.m., 10 a.m. Eastern, pardon me, December 22nd. This looks like a pretty clear-cut reversal. If we go back in time and see what it would have looked like, this is what it would have looked like. As you can see, we have a significant volume spike that's much higher than the moving average, than the volume moving average of 10, as you can see here. And then price just moves upward. So I think that was actually a really good example of an over sold point where too many people had sold. And yeah, we see oversold volume here. Then price goes back up. We see very, very clear. I think I might have showed this. No, I don't think I showed this in the PowerPoint. This is very clear breakout volume, as you can see here. Because price breaks below this support level on very high volume, which continues the downtrend. So that does make sense. I'm looking for a good spot for continuation volume that's not overbought or oversold. I think I see some good continuation volume here. Let me get off auto. I see some good, really good examples of continuation volume here. Not really significant volume spikes, but when price makes this reversal, it does have great starting volume here with that candlestick. And then these candlesticks have significant volume as well, showing us that demand's probably high. And the price goes upward, as you can see. And then this looks to be continuation volume as well, because price recently had a short-term reversal. So I think this is a very clear cut of continuation volume that occurred with a bit of an uptrend. Yeah. Oh, and one last example that I'm going to put in here, just for some help, is notice this. As price is going upward here, look at volume. What is volume doing as price is moving upward? Honestly, really nothing. Volume is like flat and even decreasing. It's minimal. So this is volume divergence. And I think I'd shown this before. No, I didn't show an exact example of this. But this is what a weak uptrend is going to look like. You're going to see very, very low volume, and as price is very slowly going upward. And then finally, you might see a volume spike at a resistance level. And then that's going to propel the price to go downward. All right, so yeah, that's going to be it for just a quick video on practicing how to trade volume. We went over using volume spikes. We went over We went over volume trends and what those look like. And then we also went over some rule of thumbs that you can use when you are looking to trade or exit a trade. So yeah, that's going to be it. If you have any questions about volume, comments, or concerns, feel free to leave them below. Thanks for watching.